Hello. The importance of understanding the true cost of debt, including interest and fees, and recognizing that debts are not all equal. This lack of understanding can lead to underestimating the financial burden and struggling to prioritize debts effectively. The tricks are essentially the ways credit card mechanics work that can easily lead consumers into paying more than they expect, a fact that lenders benefit from and may not highlight for the average user. Here are some aspects of credit cards, based on insights about debt costs and structures, that might feel like hidden tricks to consumers. 1. The true cost beyond the interest rate, APR. Banks often prominently display an interest rate, but the annual percentage rate, APR, gives a better picture of the true cost because it includes certain fees. Focusing only on the base interest rate means you might underestimate how much borrowing actually costs. Understanding the difference and recognizing that the APR is crucial for comparing costs on a level playing field. Banks benefit when you don't fully grasp the overall cost of borrowing. 2. The power of compound interest working against you. Compound interest means you pay interest not just on the original amount borrowed, but also on the accumulated interest from previous periods. This is how debt can grow surprisingly quickly if not paid down. While compounding is inherent to how interest works, its accelerating effect is not always intuitively understood by consumers. Knowing if your debt compounds daily, monthly, or yearly significantly affects your total payment. Banks profit more when your balance and the interest owed both grow. 3. Minimum payments designed for prolonged debt. Credit card minimum payments are typically calculated to be a very small percentage of the balance, often barely covering the accrued interest. Paying only minimum payments means spending years and paying extra in interest, significantly increasing the total cost of the debt. This structure keeps you in debt longer, maximizing the amount of interest the bank collects over time. It's a mechanism that prioritizes the bank's long-term revenue over the customer's rapid debt clearance. 4. Fees accumulating beyond interest. While not strictly hidden, fees like late fees, annual fees, or even less common service charges add to the cost of credit beyond the stated interest rate. These fees are a source of revenue for banks, and consumers who aren't diligent about payment dates or account terms can easily incur them, adding to their financial burden. The recognizing of these fees and understanding which are avoidable. 5. Variable interest rates. Some credit cards have variable interest rates that can change based on market conditions or even your payment history, though the latter is less common now due to regulations. This means the cost of your debt isn't fixed and could increase, potentially making repayment harder and more expensive without any action on your part. Banks benefit from the ability to increase rates, especially in a rising interest rate environment. It can be highlighted that variable rates can make debts riskier over time. If this discussion is making a difference, consider hitting the like button and leaving a quick comment. We love hearing your insights and experiences. Understanding these mechanics is crucial for effective debt management. For gathering all documentation to see interest rates, fees, and terms clearly, using online calculators can help you compute how much extra you'll pay over time under different scenarios, revealing the long-term cost of these mechanisms. By analyzing interest and fees, you gain tools to see beyond the total amount owed and understand the underlying financial burden. This knowledge empowers you to make informed decisions, prioritize high-cost debt, and potentially explore options like balance transfers or refinancing that reduce the bank's profit from your debt. Clear understanding of these costs moves you closer to financial freedom. If you found the video helpful, please do not forget to like, share with your friend who finds it beneficial, and subscribe to my channel. Also, if you are interested to learn more, discover the full roadmap, the specific techniques, and the proven system to master these essential steps in our course. Learn more today. For a more in-depth look at the costs of debt and how to analyze them, be sure to watch the video also linked in the description. Thank you for joining us on this journey to financial empowerment. If you found value in today's session, your like, comment, and share truly help our community grow. And for continued support and new strategies, make sure you're subscribed and have notifications turned on.